Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, December 31st, 2009. Well folks, this is it. Last trading day of the 2009 year. We are looking at a market that is mixed to slightly lower across the board. You can see the Dow is actually down about 55 points right now. NASDAQ is down 6 points, and the S&P 500 is down about 4. So you actually have probably the biggest down day, which by the way is not a big down day at all, but the biggest down day in the last 2 to 3 weeks, I would say, it seems, in this market anyways. We've been at a very, very tight range on extremely light volume going into the end of the year, and as you can see from the chart of your SPY here, you can see you're just focusing on the downside. Now, you actually have a small little bearish pattern in the charts that seems to be playing out to the downside. I'll go over all of that as well for us today in the video. I also want to talk some technical patterns on some different charts, alert you guys how, again, some key calls were made and how you know. And again, remember, it's all about education. All right, this chart that you're looking at, every chart that you're looking at, it doesn't matter if it's Forex, if it's options, if it's stocks, if it's ETFs, if it's commodities, they all can be read. Again, it's like a book. You're looking at a book. You just don't know the language yet. You have to learn how to read it. If you can read it, it will tell you everything you need to know. And that's the bottom line, folks. That's why I'm here. That's why I do what I hear, to spread the word. That's what I do, why I do what I do, to make sure you all are fully versed in these languages. And again, it's just such a great thing to kind of be on the right side of the trade for once, instead of always fighting trades and having trouble with trades. Now, bottom line is, what did I just say? I just said we're talking about a little bit of an in spirit of bear flag. Would you take a look at it? The gap up today, the move down, look at that pattern. That's a little bit of an in spirit of bear flag. Now, what would I say? How would I analyze it as a chief market strategist here at In the Money Stocks? Well, first thing I would say to me, or say to someone who's trying to learn, would be take it with a grain of salt. Yes, it's a good pattern, but you don't want to get too excited over it for very much activity to the downside. Now, why? And again, I'll give you guys 1 or 2 seconds to think about why that would be. And the first thing I would say to you, as you've thought about it, some of you may know, some of you may not, and this is why it's good to learn. First of all, volume. Volume is extremely light today. 30 million, 34 million on the SPY because it's the last trading day of the year. Everyone's already on that holiday mode. Ever since really a week or two ago, they're on that holiday mode. Therefore, bear patterns tend to play out in a lot less of a major way when the volume is light. So yes, you're getting a little bit of a downtick here. The last 3 candles are coming down, but it's very unlikely that you'll break this low to play out the bear flag totally. Could you come down to this dotted line? Yeah, that's always possible, but ultimately, I wouldn't expect too much more than that. If you do break down, you have a lot of support here as well. Now, I made a call a few days ago to our premium subscribers. I want to go over that so you guys can learn from that as well. First of all, I said to them a few days ago, I said there's a ton of support at the area of 112 on the SPY to 112.20. A ton of support. I said I don't think the market gets below that. I just don't think so. I think there's going to be a lot of support there. I think they're going to hold the market above there. And so far yesterday, that was the perfect call. The low yesterday was right at that dotted line and the 200 moving average. Guess where the low was today? All right, so you see that support line. Not only that, but if you wanted to scalp this market today, you could have easily looked at this dotted line right here and played the scalp. Why? Because you had a double bottom off the dotted line again. Look at from yesterday's open, and you actually went more than 24 hours to today, kind of around 11 o'clock till you hit that, and that's an obvious double bottom. So you're just utilizing the charts. The charts are telling you things here. This chart was telling you to buy the market right here. Very simple. Doesn't take a brain surgeon to see that either. That's what I love about what I do. I don't have to calculate, stochastics, MACD, blah, blah, blah. That's nonsense. Throw it out the window. Get rid of it. Just read the chart. Have some moving averages on there. We use the 20, the 50, and the 200 on all our time frames, the 10-minute, the 60-minute, daily, weekly, monthly. Utilize trendline analysis, which is what we do, which is finding the key pivot points on these lines. They will tell you every place in the chart to know where to buy or sell the market. All you're trying to do as an investor, swing trader, or day trader is buy, support, sell resistance, or short resistance. All right, that's all you're trying to do. You're not trying to reinvent the wheel, essentially. Now again, so you can see here the gap up today. We gapped up very nicely today. It wasn't a huge gap up, but it was a small gap up. Now the key was we had jobless claims this morning coming out. Jobless claims actually coming in pretty nice. The expectation was 465. We came in at 432. But remember, you're at the end of the year. No one cares. And I said this to the Research Center guys, which is again one of the individual premium services in the Research Center. Includes everything underneath the Research Center. You have also the chat room, obviously, and so forth. But I said it to the Research Center guys, and I said it to the chat room yesterday as well. Is that remember, guys? I don't think unless it's a geopolitical event that it's going to have much impact on this market, meaning that you're just going to do what you're going to do. If you have positive or negative news, it's just the market's going to float around. And that's essentially what we're doing today. We're floating to the downside a little bit here and just bouncing off the lows from yesterday. And that's really where we are. A little bit of a bear flag, beautiful bear flag from a buying opportunity off this dotted line. You can see as that's playing out, coming down just a little bit. Now, again, the jobless claims came out. That was a little bit of a gap up, and then you just kind of floated all the way down. Now, remember, there's going to be a lot of, in my opinion, guys, there's going to be a fair amount, a little bit of profit taking now. Remember, anything that you sold to count it, you had to kind of sell it by the 3-day settlement period, the 3-day, to the end of the year. So you had to already take care of that. So going forward, again, people are not going to necessarily be buying this market. They can't get it on their portfolio base on the statement before the end of the year anymore. So it kind of takes away that incentive to buy. If you were going to buy this market, you were going to do it, kind of Monday-ish or so to make sure it was on that statement going out to your clients. Those are the big hedge funds and the big money managers. If you were going to wait till this point, there's really no purpose anymore. So it takes a lot of that buying out. Then you just have a few profit takers here at this point, it looks like, that are just kind of taking a little bit on the profit side. And the market's, again, very extended. We talked about that. And that's helping keep a little pressure on this market. Now, a couple other things to go over. Number one, and this one I'm going to talk about a few little educational guidance tools that I want you guys to be aware of that you can utilize and that, giving us the basis. I always like to show, based on this chart pattern, this is what happened, this is the result, that is why it works. And again, just to go into that, folks, what I want to do here is talk about Goldman Sachs. We can talk about Wells Fargo, all the financials. And this went out to the free guys, and that's what I like. I like that I put out some of these calls to you guys that are kind of just the free viewers of the video, and then I give the more hardcore guidance to the research center guys in the chat room because they get the top-notch stuff. But every once in a while, I do throw out something to you guys that are watching these free videos. And the call that went out last weekend, you can go back and look at it. Last weekend's weekend technical analysis video, I said, guys, the daily charts of Goldman, Wells Fargo, Morgan Stanley, JP Morgan are all in spirit of bull flags. And I said this in the video last weekend, and just kind of proves the point of how accurate the analysis is that these patterns tell me that you're going to see this market stay kind of neutralish this week coming in, and this was last weekend, so this full week here, Monday, Tuesday, Wednesday, Thursday, which is where we are today, that you're going to keep the market floating or at least not tanking much because the financials are going to step up, and that's what's going to keep this market from really rolling over. I ultimately thought if the financials weren't going to keep the market floating, then this market would go down significantly, but because of the chart pattern, it told me that that was going to happen. So you look at patterns, and again, look at this beautiful pattern here. In spirit of bull flag pattern right here, hugging the 20, that tells you you're going to have a break up. Absolutely. All right? That's a high percentage trade. Not only that, but look at Wells Fargo. I mean, look at this pattern. This is a beautiful in spirit of bull flag, and then look at the last couple days, keeping this market from really rolling over in dramatic fashion, the fact that these financials are leading right now. Goldman Sachs, I just showed you guys this one. Look at the breakup. Goldman Sachs in the last 2 days is up $5. So again, you can see how those patterns dictate. And again, all I was doing there was recognizing the fact that technology is overbought and that needed to pull back. That really ran the last couple weeks until this week. And all the other sectors, you had a lot of these other bounces coming in on commodities and other stuff earlier in the week and last week and so forth. And now you're coming into a position where all those had run for the most part, and now what's left to run? And again, based on pattern analysis, it told me, and I said it to let you guys in the free weekend video last weekend, that the financials would be the leaders here. And clearly look at that move. I mean, that's just a beautiful move right there. All right, so there you have it. You can look at Morgan Stanley, same type of deal there. You can look at Wells Fargo. I just showed you Wells Fargo before. JP Morgan, beautiful chart as well. Look at that move up and sideways, and now starting to move up. Now, all the 50 moving averages are essentially target. And interestingly enough, Goldman Sachs here is looking like it's coming right into target, probably hits that target of the 50 by the end of the day today, and which is almost there. So you can see that very clearly. In any case, that's what's going on right now in the market, folks. Light trading, but still some trades out there, absolutely. The calls continue to be dead on. Again, we're coming into the new year. 2 hidden gems will be posted in January. Be on board for those. If you're not a small cap trader, there's tons of things for the other players out there. All right, we have swing trades, longer term analysis, the hot Pro Trader watch list just continues to be rock solid. The hot charts and alerts yesterday, this is it, guys. And this was another huge call that went out to the Pro Trader watch list. Check this out. I had posted this early in the week, last week, or this week actually, early in the week, that you were going to have Microsoft coming into major resistance based on the fact that if you take the 2000 high, and check this out, I love this stuff. Take the 2000 high, connect it to the 2007 high, look at where you came into. And sure enough, I called out in the hot charts and alerts, and this post went out there for all our premium research center guys, that would be resistance at 3150 as a top. Guess what? Microsoft earlier this week hit the exact high, the 52-week high, at what price? $31.50. At the exact level, $31.50 is what I pointed out in the hot charts and alerts. You can actually sign up and go check it out if you want to, but you'll get the next calls as well, obviously, for the next month. But as you say, right there, $31.50, that's the exact high on Microsoft. Since then, it's dropped basically 75 cents off that high. Beautiful shorting opportunity. And again, these are just longer-term swing trade plays that you can have. I even think Microsoft's headed even lower, but I'm just saying that's in the short term. But again, when you look at the hot charts and alerts, the Pro Trader watch list, they're more, Pro Trader watch list is more like 1 week swing trades, 1 to 2 week swing trades, and then the hot charts and alerts are actually, depending on the chart we show, for instance, this is the monthly, that tells you it could be a longer term top being put in on Microsoft, and that's just a beautiful thing. So again, I encourage you to get on board. 2010 is going to be wild. January's coming. Be ready. Join up the Research Center. Join in the chat room. Be ready to conquer these markets. The profits will be even bigger in 2010 from in-the-money stocks than they were in 2009. Take care, folks. Have a wonderful, wonderful new year. Happy holidays.